Welcome to our December edition of Student of the Market. Happy holidays from our team. It has been a great year, and we are looking forward to 2026. As always, we are delivering a concise snapshot of the market so that you can stay informed and focus on what matters most to you. Please reach out to us with how our thoughts today impact your portfolio. What we'll be going over today, we're looking at the US stock market and its impressive winning streak, consumer sentiment numbers, the Magnificent Seven stocks, trends in emerging markets, and the Fed policy. So let's dive in. As you will see here on our first slide, stocks continue their winning streaks. November marked the seventh straight month of gains for the US stock market. It's the longest winning streak since 2021. Even though it's been a bumpy week to week ride recently, the trend looks really good. Historically, when we see streaks like this, markets tend to keep their momentum going. This is really good news for long term investors. On the next slide, you will see consumer sentiment is near record lows. This may be a surprising stat based on the times that we are in today versus the valleys that we have had low consumer sentiment previously. But this is a really good sign for the stock market as well. Historically, periods of low sentiment have often been followed by strong stock market returns. It's a reminder that emotions don't always, and a lot of times don't, align with the market's performance. On this slide, we'll be talking about the Magnificent Seven in 2025. We've been talking about the Mag 7 for several years now, and not the other 493 stocks in the S&P 500. This year, through the end of November, we have seen some dispersion of returns, which is really good for the market. It's broadening out. Only two of the Mag 7 stocks, Alphabet and NVIDIA, are outperforming the S&P 500 this year. Even though as a group, the Mag 7 is still outperforming the other 493 stocks. You will see on the left, the Mag 7 is in red, and then the 493 are in yellow. And what you'll see there, obviously, is the Mag 7 haven't been performing as well, but the other 493 have been hanging in there really well and having really good returns. It is interesting that the bottom 100 names of the S&P 500 this year have actually been negative. So it's really broadened out, and I think that's a positive sign. It's why diversification matters. Emerging markets have done very well in 2025, depending on the index, up 20 to 30% year to date. Even though, as you'll see here, the investors have actually been pulling money out of emerging markets. So outflows have typically been preceded by strong forward returns as well. So another good sign for the markets in general. Obviously, this is a diversification factor, being that it's emerging markets, but an area that has done well and has seen flows coming out. Finally, on this last slide, Fed cuts and no recession have been favorable to all asset classes, including alternative investments. We've been talking about this the last several months, that this is something that we've been really leaning into, that as long as we're getting those Fed cuts and they aren't going the other way, and that we do not see a recession in the near term, it should be very positive for stocks, bonds, and alternatives. So conditions continue to look similar today. So this is definitely something that we will be keeping an eye on, and another positive for the market. So in closing, the market has been choppy, but as you will see through this presentation today, there's been very positive signs in the market. From the US stock market winning streak to low consumer sentiment to the dispersion amongst the S&P 500. And as we've been saying for the last several months, Fed cuts with no recession in sight. So as a final takeaway, markets move fast. Headlines continue to be noisy. Staying diversified, understanding the big picture, and keeping a long-term mindset is how you stay ahead. If you have any questions and want to talk through what this means for your portfolio specifically, reach out to our team at THG Retirement Solutions. We're here to help. Thank you so much for tuning in. Happy holidays. We'll talk to you in the new year. Don't forget to like and subscribe. We appreciate it. Thanks. Bye.